Burger King, boutique burger joints, and all-caught delivery services. All of these players have in fact present for some time now, but none had been able to dent McDonald's same-store sales growth for the last few quarters. That's unfortunately changed in 2019 with Westlife Development, the franchisee owner of McDonald's in a couple of geographies in the country, reporting a drop in what's called the same-store sales growth, or SSSG, in industry circles in Q4. So does that throw a spanner in the works for McDonald's? Let's ask Amit Jatia, the Vice Chairman of Westlife Development, who joins in on the show, and Agam Vakil joins in for that conversation. Agam, over to you.
Thanks for that. And Mr. Jatia, good morning, and thank you so much for taking the time out. And you were mentioning, for the full year, the same-store sales growth stands at around 17%. For the fourth quarter, it's at around 5.7%. But this comes off on the base of 25% in the previous quarter. So how is FY20 likely to play out? Are we likely to see some moderation based on, the trends that you're witnessing so far?
See, as far as same-store sales growth is concerned, firstly, it's not comparable to a number from the past because it's a compounding effect. So over the last 3 years, we've actually grown. If you take a base of 100 rupees 3 years ago, it is already at 140, and therefore 5.6% growth on 140 from a rupee amount point of view would be equal to a 10% 3 years ago. So I feel that that we are quite pleased that we've been able to grow the 140 forward. Moving forward, however, we've given our Vision 2022, and in that we've said a more sustainable, consistent same-store sales growth is 7 to 9%. And even last year when we were running at 17% for the whole of the year, 25%, I said that consistently what you expect should be 7 to 9%. So that's what we are saying for FY20.
Mr. Jatia, we all know about discretionary demand. Over the last 3 or 4 months, the weakness in the slowdown in the auto segment is for everyone to see. What we've also now started noticing is that the quarter gone by has not been that great for the FMCG segment. At least one of the managements of the company is suggesting that even FMCG is not recession-proof. The slowdown is evident in that sector too. When you come down to the quick service restaurants industry and your observations, what have you made of discretionary demand? Is slowdown evident here in this sector as well?
So, even if you look at a quarter, I feel it is too short to come to a conclusion that there is a slowdown or not. I mean, of course, we are living in an uncertain, volatile world, plus there are elections. So while we don't normally break it up, but within the 3 months, there was 1 month that was slightly weaker. Now, whether that is going to continue in the quarter moving forward or not is yet to be seen. However, I don't think that a same-store sales is the right way to judge that. Because as I explained earlier, on a base of 140, the fact that we've retained that and grown that by 5.6%, I feel is quite good. However, whether the consumer sentiment is changing or not, I think we've got to wait another quarter before we are able to sort of come to that conclusion, at least from our business and our point of view.
And how would you distinguish spending trends between major cities when compared to perhaps satellite cities and smaller towns?
So I find that spending power, I feel it's about potential. So if you look at, say, a smaller town, I mean, we have many restaurants in smaller towns. I find that maybe instead of 10 restaurants, 2 restaurants are what is viable. But then the 2 restaurants do really well. So at this point in time, I'm not seeing that the smaller towns are not doing well versus the bigger towns. In fact, I find that reasonably moving consistently. Normally in smaller towns, the difference I see is that the group sizes are bigger. So normally our average check is actually very healthy in smaller towns. While in a big town like say a Mumbai or Pune, the group sizes are normally smaller. So therefore the average check per transaction tends to be generally lower. So I feel that the big difference I see is that if you look at a smaller town, the number of store potential is lower, but the average volume could be the same as a big city as well.
Right, Mr. Jatia, then let's talk about some targets when it comes to 2022. Well, 296 restaurants as on March 31st. You have the target of hitting about 400 to 500 restaurants by perhaps 2022. do you have any targets in mind when it comes to this specific financial year, that is FY20?
So typically we do 25 to 30 restaurants a year. So essentially, if we add about 30 restaurants a year, we will pretty much hit at least the 400, 10 stores here and there. So we are, that's the rough number that we are sort of looking at year on year.
Also, when it comes to your target of around 300 to 325 McDelivery hubs by 2022, where does that stand now and what will it be towards the end of the year? If you could also tell us a little more about the equation between online sales against dine-ins, how is that ratio playing out?
So essentially, in terms of numbers, we are at about 215 delivery hubs today. And therefore, the 300, 325 in the next 3 years is very easily doable, because pretty much every new restaurant that we bring in should have delivery in most cases. So that I'm, pretty confident about. Of course, delivery was a very small base few years ago, and therefore the percentage growth on delivery is much greater than the in-store. But essentially for us, delivery still remains a brand extension, because along with delivery, we also have McCafe, which is pretty much in-store. And McCafe has been doing very well for us also. So that's sort of balancing out very nicely. But overall, delivery as a business model is growing very rapidly. That's reflecting the growth in the marketplace as well.
Right, but sir, how would you distinguish between online sales and dine-in sales at this point in time?
So yes, absolutely. I mean, engaging consumers is the biggest job of a food brand. Consumers are either looking for new platforms, new flavors, or they're looking for new news to do with food. So I think over the last 3 or 4 years, we've established some really good platforms like the McSpicy. Last year, we launched the rice as well. So we have some good ideas that we are working on, which is in the pipeline. And through the course of the year, yes, you will always see innovative stuff coming from Westlife and McDonald's.
Right, but sir, anything in store as far as this particular quarter is concerned?
No, not in this particular quarter. No, in this particular quarter, we've done some work. I mean, it's already in the marketplace. So, for example, we've done some coolers, and the coolers have resonated extremely well with the consumer. So, there's a mixed berry, there is a raw mango, and there's one other one. Plus, we've got 3 or 4 different flavors in McCafe as well. So essentially, for this quarter, that's what we've done. It's more a summer to sort of promotion through beverages. But in the coming quarters, there's more things which I can't really talk about.
Fair enough, Mr. Jatia. I understand that. We'll leave it at that. Thank you so much for joining us and taking the time out to speak to us here on Bloomberg Quint. Well, that's the management of Westlife Development. For now, the weakness evident in the rest of the industry is not as apparent in their numbers. But again, as the management suggests that we're going to have to wait for another quarter to see whether or not that is well impactful for the sector.